Hello, everybody, and welcome to this weekly market recap for the week ending Friday, October 24th, 2025. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. It's a pleasure to be with all of you again this morning. Kind of doing an odd timing on our recap, doing it Monday morning. Just a lot going on with earnings and everything over the weekend, but we did want to get a quick little message out to everybody, taking a look at what happened last week. Also got a big event coming up tonight and a special report that's going out to members on Tuesday morning. So I want to talk about all that. Yeah, we got a lot to go over. So I'm going to go ahead and switch and jump right into the action from last week. I will say a couple of things. Number one, we did get the CPI numbers out on Friday, even though the government is in shutdown mode. They did produce those numbers and they came in a little bit better than expected. So we saw a big jump in the small caps. We saw a big jump really in equity prices overall. And it capped off a really strong week, even though historically it's the worst week of the year. Last week plus today, Monday, October 27th, this is the worst week of the year historically since 1950. But the market kept its head down, kept moving higher, and really finished in all-time high territory. So if anything, maybe it's just a lesson that you don't fight a secular bull market, even in a bearish historical period. So the bulls were very resilient, kept moving higher. So let's take a look at how we finished last week. The small cap Russell 2000 gaining almost 2.5%. The mid cap 400 gaining about 2 1/3%. Dow Jones up 2.2, NASDAQ about the same. S&P 500 up almost 2%. But once again, transport's lagging, down 1.4% for the week. So very bifurcated in terms of the performance of the transport stocks. As we move on, looking at the sectors, technology leading last week, gaining more than 3%. Energy up 2.4%. What was interesting there is if you look at the crude oil chart here, going back over the last year, you can see that crude oil at the beginning of last week was testing not only a 52-week low, but if we pull this up, go back 5 years, we were looking at testing the lowest level we've seen since pre-pandemic on crude oil prices. So that bounce came just in time in terms of crude oil. And as a result, we saw energy shares do very well, gaining almost 2.5%. Industrials up 2.1%, healthcare 1.93%. Those were your four outperformers last week. Then we had again that S&P 500 coming in just under 2%. And then financials, real estate, consumer discretionary, and materials underperforming, but all up more than 1%. And then the laggards, communication services gaining just 0.5% last week, along with utilities and then consumer staples, both of those groups, both defensive groups, by the way, but both of those groups in negative territory. Looking at the industry groups, so aluminum having a really strong week last week. And actually, I do a chart list every week, leading stocks and leading industry groups. And I actually added aluminum. I really liked what's going on right now with the aluminum chart. So I'm going to pull that up. Now, this is on a relative basis, aluminum versus the S&P 500. But we are now at the highest level we've been since back in March as far as aluminum relative to the S&P. And you can see seems to be gaining quite a bit of momentum here just over the last couple of months. The weekly relative PPO went positive for the first time in 2025. So that's bullish relative momentum starting to surface. And you can see down here on the aluminum chart, this is the absolute price of aluminum. And we have had a $25 jump in the aluminum index in just the last month or so. So I wanted to add this one. I don't know if this strength and this momentum carries, but you need to be aware that aluminum certainly is making a big move to the upside. Oil equipment and services. So that's the big area within energy that did so well last week. You can see that group. This doesn't mean that the group went up 7.42%. It means it went up 7.4% more than the S&P 500. Remember, the S&P 500 was almost up 2%. So that takes this up over 9% for the week. So oil equipment and services, very strong. Technology also doing well. And you can see computer services. One of the reasons for that, computer services had a great week. And then scrolling down here, you can see the next group in that technology area is electronic equipment, which has just been on absolute fire. If we pull this up, look at this relative strength in the electronic equipment area. So if you're trading stocks, leading stocks in this area, I mean, if I was looking for momentum stocks, this is exactly the way I'd go about finding them. Look for the areas that are really strong relative to the S&P 500, like electronic equipment, and then simply look in that particular group trying to find leading stocks. Moving on, we had Intuitive Surgical. So these are the S&P 500 and NASDAQ 100 component stocks that did very well last week. Many of these because of strong earnings. We had earnings coming out, starting to increase last week. They'll increase even more this week. And Intuitive Surgical was one of the big winners last week, along with General Motors. Halliburton gaining 19% last week. Las Vegas Sands gaining almost 19% as well. So a lot of really strong earnings, for the most part, fueling many of those big jumps last week. And then on the flip side, I'm not sure about Molina Healthcare, but I know Deckers did report last week, and you can see that was down 13%. So they do go both ways. But for the most part, the earnings have been very strong, mostly coming in well above consensus estimates. And I think that bodes very well for the market, because there are two drivers of the market. And I'll show you in just a minute. We did an event on Saturday, and I'll show you at YouTube where you can go check out the recording. But there's really two things that drives the stock market over time. It's Fed policy, or interest rates, and earnings. Well, if earnings are beating and many companies are raising forecasts, and we're looking out onto the horizon at lower interest rates, folks, this is nirvana for equities. This is what I talked about at the beginning of the year in 2025 at our Market Vision 2025 event. I said that we might have what I thought was going to be a correction in the first quarter. We actually did go down and touch bear market territory very briefly in early April. And then I said we'd rally back and we go to 7,000. Well, we've rallied back. We're at 6,800, and I think we're going to 7,000. So, a lot of this, in my opinion, already, was kind of set in stone at the beginning of the year. And the main reason for me being so bullish in the second half of 2025, and why I believe we'd come out of correction and go all the way up to 7,000, was because I really felt like the Fed would be back to cutting interest rates. And if you cut interest rates and earnings are going higher, that is going to absolutely send U.S. equities through the roof. And that's what we're seeing. Now, I mentioned, or actually I didn't mention, but let me go back over here. I wanted to show you a group that was not performing very well last week. Right down here in the number 8 spot, railroads. So railroads underperformed the S&P 500 by 5 percentage points. And that's kind of significant, because I had pointed out a stock recently, CSX, which is a railroad. And I said, hey, you got to watch this thing. If it breaks out, it could really start to take off. And at the same time, we were seeing strength at the end of September in railroads, right? So we're watching it. Well, we never got the breakout. And if we look, we go a little bit longer term chart. Look at this 5-year weekly chart. This 37, 38 area, even up to 39. This has been a really difficult area for the last several years for CSX to negotiate. Well, if we start to get strength in railroads, this is one of your leaders. So if we go back and we look at the relative strength, look at CSX relative to railroads making a big breakout. So this is a leading stock, but it's a lagging group. Look at the relative strength of railroads rolling over and going lower in October. Now, I'm going to keep bringing this up because industrials, including many transportation areas, love the month of November. So if we go up here and we pull up the seasonality, and I'm just going to pull up transports. And let's go back the last, since this bull market. Well, if we go back the last 20 years, you can see November going up more than any other month. But if we just go back the last 13 years during this secular bull market, you can see that November transports go up 83% of November's, and they average going up 5.9%. No other month is even close. July is 3.6, and then the next is October at 1.5. So 5.9, this is when we start to see a lot of strength in the transports. And I'm, again, just mentioning that because we have 1 week left in October. And if we start to see money rotate into that area, just keep in mind a stock like CSX, which is showing leadership. All right. I want to mention for any of you that are new, or of course, all of our regular viewers, you can go over to earningsbeats.com. That's our home. You can start a free 30-day no-cost trial. You will have to give credit card, but we'll let you know at the end of the period before you get charged that your 30-day trial is expiring. Not only that, but we'll also give you a great annual special if you would like. And while I'm mentioning annual special, because we had that event on Saturday, we ran what we normally run, which is our flash sale, which saves you an extra $200 on annual membership. So you can click there, or you can click this link on our site, and it'll take you to the page where you can claim the offer. This expires at midnight tonight. So you do have to act quickly if you would like to take advantage of that 20% off on our annual sale. Also, if you scroll further down, we have a free newsletter, completely free, no credit card. You can sign up for that with your name and email address. We would absolutely love to have you. Now, there was an event that I did on Saturday, and I wanted to just mention that if you go to Google or go to YouTube and you search 2 most important drivers of market gains along with my name, you will see this come up and you can check it out. I think that would be a great thing to do, is just, talking about the importance of interest rates and the Fed and what the Fed's doing. And so just check that out if you haven't already. I think it'll serve you well. Last thing I want to point out is back on October 7th, instead, in lieu of a daily market report, which I always send out to members every day, I went through and I did an analysis, and I found 10 stocks that I felt were ready to make pre-earnings runs in October. This was October 7th. And now here we are. It's October, 27th. I'm going to go over to Excel because I have a spreadsheet showing you how these stocks performed. Here are the 10 stocks. And by the way, going back over to the, what I did is I went through the criteria, everything I looked for in these stocks, and then I listed the stocks, listed the charts, showed exactly what I was looking at on the charts. And so with that, now let's take a look at the results, where from the time of mention back on October 7th, I think it was as of the October 6th close. Yeah, here's the October 6th close. This was the current price as of Friday, October 24th, with one exception. Netflix reported last Tuesday. So this was through Tuesday's close, because this is pre-earnings runs that we're looking for. Anyhow, this is how all the companies have done on a percentage basis. Very strong. We had one 24% winner, 3 others better than 10%, 3 more better than 6%. Anyway, the average came out to 8.37%. If you nailed every single one of these stocks perfectly, if you got in on October 6th at the close and you nailed every one of the highs perfectly, you would have averaged 12%. And if everything went completely against you, you would have lost 3% on average for each one of these positions. Now, keep in mind, the S&P 500 only went up 0.76% during this period. Our 10 stocks gained an average of 8.37. That's almost 8 full percentage points above the S&P 500 in 3 weeks. This is in a snapshot what we do in terms of putting our portfolios and things together. So anyway, the reason I mention this, Tuesday morning, tomorrow morning, in lieu of a daily market report, I'm going to give you 10 more, or as many as I can find. I don't want to force 10 if I don't see 10 good ones. But whatever I come up with, I'm going to be providing to our members. These are companies that may not be reporting in October, early November, but might be reporting later on, 2, 3, 4 weeks from now. And so again, looking for companies that could have a big run heading into earnings. So anyway, that's all I got. Make sure you check out Earnings Beats, though. Go over to our website. And again, you can sign up right here, 30-day free trial. Make sure you join us. We've got an earnings event Monday evening. So I'm going to go over companies that I think have already reported great numbers. They could be in our portfolios when we draft our portfolios in about 3 or 4 weeks. Also, I'm going to be going over all the Mag 7 stocks and what I think is going to happen with those based on their charts. So if you want to be a part of that, that's tonight. And then tomorrow morning, I'm going to give some additional stocks that I think could have some serious pre-earnings runs over the next few weeks. Anyhow, appreciate you tuning in. Please like the video and subscribe to our channel. Make sure you turn those notifications on, because once you subscribe, turn your notifications on, when we do live stream events, you'll be notified. So anyway, have a great rest of your day, everybody. Thanks so much for your support. Happy trading.